if you don't already know, the failure rate of traders is extremely high. 8 out of 10 people that start trading fail. And the reason most of these traders are failing are all very similar. And today I'm going to go over all the 6 reasons that I personally think most beginners are failing at trading. And hopefully you avoid making one of these mistakes.
So it depends on the position and depends on how I'm trading for that quarter, right? So a lot of my position sizing isn't consistent, where it's like, if I'm actively trading and I'm up, let's say, $1 million for the quarter. So some big events that happen month to month is like CPI data.
Okay. So like
FOMC, if Feds are going to cut rates or not. Earnings season, like right now, we're currently in earnings season. So around earnings season, how are companies reporting? Like yesterday, Meta reported. So the number one thing is identifying a way of trading, right? Identifying a way of trading in terms of what's your viewpoint on the market, how do you think the market operates, and then from there, establishing a set of strategies, right? So for example, for me, the way I look at the market or the way I think the market operates, it's essentially an auction, right? It's transactions between buyers and sellers into the marketplace, and the market is kind of transacting those transactions, right? The idea there becomes to identify where the opportunities lie in supply and demand. Are buyers more aggressive here? Are buyers interested in paying this current price? Are sellers offloading at this current price? And if I'm able to identify that, my job then just becomes to make money off the difference, right? So that's like a simpler approach that the market looks off. The second thing is, you'll see on social media a lot of people, support resistance pattern, this, that. It's all BS. Right?
Really?
Because think about it. How is $1 trillion plus industry working off basic random lines?
That's true.
Right? Like it off a pattern. Hey, we're seeing this pattern. It means it's going to go up. It's not that simple.
And even at that point, you'd think most of the competent traders would all know the patterns. And so is that like a self-fulfilling thing then at that point? Is that why people can get away with like teaching it?
Because I can go in the past and I can show you 10 examples of a trade where the patterns worked.
Yeah.
And then I can say, look at the times it worked. But if I show you over a component of 10,000 trades, you'll see it's not as consistent as you think it is. So one advice is, if you want to trade, the first year to 2 years, do not make a goal that I don't want to make money.
Yeah.
Write it down. My goal on year 1, I don't want to make money. Get rid of that mindset, I want to make money.
Yeah.
If you enter the space of trading and your goal in 6 months is to make $50,000, or your goal in 6 months is to make X amount of money, just walk away. Yeah. Like I want everyone to do well, but in a realistic world, that's not what's going to happen, right? So when you get rid of the element of money, it makes things a lot more transparent, because now your focus goes into improving. Right? Money is a byproduct of being a successful trader, right? So what are the things, the traits, the skill sets I need to become that successful trader, right? I need to be able to identify there's an element of the market, there's an element of my trading style playbook, and then there's an element of me. There's 3 different elements I need to learn. You can understand the market really well, and I know certain people that can read the markets really well, but if you tell them to put on a trade with size, their brain goes blank, because they do not know how to take the data that they have and process it through their brain without allowing their emotions to hijack their thought process.
I see.
Right? So those 3 elements are important. So what I would do early on is I would pick one market, one trading style that I want to pick, right? And when I say I would pick one trading style, I would go to a person or people that have a similar trading style, right? So for example, if I'm trading stocks, what stocks am I trading? Am I trading the mega stocks, right? Like Apple, Amazon, etc., or am I trading penny stocks? They have 2 different approaches, 2 different ways of trading, etc. I can't take concepts that I learned from person A that trades penny stocks and combine it with person that trades mega stocks. Right, so I have to also break that down, because we have so much information overload in today's time, where I can watch a video of this person and then I can watch a video of the next person, and it contradicts what each one of them say. So then you don't know what direction to take, right? So I think breaking down what type of trader you want to be, taking the proper information in for that type of trader, building 2 to 3 setups, right? Hey, I think, for example, the morning top setup I told you about, take that setup and go and back test it in different market conditions. Note down the back testing approach. Well, in this session, this setup worked because X, Y, and Z. In this session, the setup didn't work. I don't even know why it didn't work. And sometimes setups don't work, and just because the market had some weird thing that happens, and that's okay, right? But if you do that over a course of 100 to 200 to 300 to 400, 500 trades, you start building this proper framework of that playbook. Now, if you do it with 3 different playbooks and you have a set of 3 playbooks, and then you combine that with the market approach of when I'm going to trade, when I'm not going to trade, when I think is going to be a trending day, that already sets you up for a good level of foundation. Now, when you get the foundation, the next thing is apply. The applying part takes, I think, 6 months. Wake up every day, write down, journal in terms of what is the market telling me today? What are the 3 scenarios I think are going to happen today? Even if you're guessing on day 1, just guess. I think the market's going to go up because X, Y, and Z.
Okay.
Market closes, go back to that and say, what happened to the market? Why did it go down? Oh, it went down because today at 10 a.m., we had this important economic data and I didn't realize. Or today at 10 a.m., Jerome Powell spoke, or 11 a.m., Jerome Powell spoke, and he said something that made the market tank. Now, next time I know, when I have these scenarios, and if Powell is speaking, I don't know where the market's going to go because he's speaking, right? So you start picking up these small clues, and these small clues stick to you. When those small clues stick to you and you apply your approach, I think you should trade with real money. Paper trading is good, but I don't think people take paper trading serious, and I don't think the element of emotions are there, the thought process, seriousness, right? Trade with very minimal capital.
Yeah.
Apply your setups, playbooks to the market, and just keep going in this flywheel of improvement. Journal, track your data, track your thought process, do weekly reviews, monthly reviews, and keep doing that for 6 months. And in those 6 months, you'll walk away, learning so much about yourself, learning so much about the market, and learning so much about your setups that may work or may not work. And even in those 6 months, if your P&L is down 10% or 20% on, let's say, $1,000 or $2,000, it's not life ending. You know, for most people that are trading with 10, 15, 20,000 and destroy their accounts, right? It's not life ending at that particular point. Instead of starting tomorrow with 20 grand and just blowing it in a week. Now, in 6 months, if you don't make money, it's okay. In another 6 months, you don't make money, it's okay. Well, guess what you did? You've gained this amount of knowledge and experience at essentially very minimal cost without damaging your mental health of like, oh my God, I'm down 30 grand. How do I recoup it? That is the worst place for a trader to be. And I tell traders, especially early on, if you go in massive drawdown on your year 1, your year 2, 3, 4, 5 are going to be dead. That's it, because you're just going to use those years to get that drawdown back.
Yeah.
And that is not a place you want to be in. So some big events that happen month to month is like CPI data.
Oh, okay. So like
FOMC, you know, if Feds are going to cut rates or not. Earnings season, like right now, we're currently in earnings season. So around earnings season, how are companies reporting? Like yesterday, Meta reported. Meta stock is up massively. If you look at the market today, you're seeing that little move up in the market as well. So looking at the overall sentiment of the market, big news like that, and how the market is reacting to those events. So it depends on the position and depends on how I'm trading for that quarter, right? So a lot of my position sizing isn't consistent, where it's like, if I'm actively trading and I'm up, let's say, $1 million for the quarter, right? For argument's sake, my risk gets a little bit more, also alongside with market conditions, also alongside with how active I am. If, let's say, I'm not active for 3 weeks, I'm not going to come to the markets tomorrow and throw on $50,000 of risk. It's just not something I'm going to do. It doesn't make sense. It's a similar concept if you're away from the gym for 2 or 3 months, you come in and you start benching your max rep again. You're going to destroy your body, right? So I slowly work my way into it. I slowly work into consistency. There's also a thing with the markets when you trade and you're involved in it, you start getting this flow of the market. You start getting this understanding of like, okay, well, you get this intuitive feeling of like what's happening. You without you looking at news, without you looking at what the market's looking at or wanting to look at, you kind of are in tune with everything, right? So I start building risk from there. Now, if I have a bad month or I can't seem to find any momentum, I'll keep like a 5 or 10K max risk. I won't go more than that on a trade or even on some days. I'm like, well, you know what? If I hit this max risk, I'm done. I need to find momentum. Now, when I find momentum, now that risk becomes contingent on my last few weeks' performance. There's times I risked 50 to 100 grand on a trade, on a single trade, where if I'm wrong, I am comfortable on losing 50 to 80 grand. Obviously, that trade has a 2R multiplier there, where if I'm risking 50 grand, if I'm right, I'll make 100 plus on the trade. Well, I'm not risking 50 to make 50. Like, that's not rocket science. Like, that doesn't make sense, right? And then there's trades where I've risked 5,000 to make 10.
Yeah.
So the R multiple element is still there, but my comfortability on taking that big scratch loss isn't really there. So it goes back to how you see some people say every position has to be similar. I think when you're early on trading, sure. But I think when you pass that early stage of trading, there are certain positions that are so beautiful where you have to throw more risk. That's where you make your money. Like you won't make big money, in my opinion, by keeping your risk consistent on every single trade. It's a good place to start to learn and identify your flaws and keep a system relevant. But I think when you see certain trade setups that happen that you see that are like your bread and butter and come to you naturally, which don't happen every day, right? So put on more size there. Put on a little bit more risk. If it doesn't work, decrease risk on the next few trades, get comfortable again. And when that trade opportunity presents itself, do the same thing. That's like my approach to risk now. But early on, which is why I was saying before, the things I say now, don't replicate it if you're an early trader. Because when on my early on days, my risk was consistent. If I'm risking $100 or $200 a trade, that's what I'm keeping consistent on a trade.
If you don't already know, the failure rate of traders is extremely high. 8 out of 10 people that start trading fail. And the reason most of these traders are failing are all very similar. And today I'm going to go over all the 6 reasons that I personally think most beginners are failing at trading. And hopefully you avoid making one of these mistakes. The first reason, which isn't obvious, is most traders have a lack of knowledge. They don't know what they're doing. A lot of people start out with trading and they think, oh, I know a few technical indicators. I know what the MACD is. I know what the RSI is. I know what this. I know how the Bollinger Bands work. With that being said, I'm going to go out and I'm going to trade. I figured it out. No, it's not just that. There's way more to it. You have to know price action. You have to know, the trend. You have to know volume. You have to understand news. You have to understand sentiment. There's a lot of factors that go into trading. You can't just rely simply on technical analysis and always go based off that. You have to fully understand that there's a lot of information out there and you have to fully understand it and know how to apply it. The second reason most traders fail is risk management. Now, a lot of people that are watching this, I have no idea what risk management is. Risk management is a very, 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 very important thing that you need to know about when you start trading. Risk management is very crucial. If you want to be in the stock market as a trader for a long time, you have to have risk management. When I first started out, I didn't know what risk management was. I never applied it. I didn't know how it worked. I didn't even know it existed. And that actually wiped me out. When you apply risk management, you have to understand how much of a maximum loss you're willing to take on each trade. And there's so much strategies and things that take in place that you guys should learn. Now, when people don't know risk management, guess what they do? They take their full portfolio, dump it into a trade, and allow them and put themselves in a position where they're losing 10 or 20 or even 30% on one trade, which should never happen. With proper risk management, my personal opinion, you shouldn't be losing more than 2% of your total account size. Reason number 3, people that start trading don't have a trading plan. They do not have a trading plan. They don't even know what a trading plan is, just like risk management. So now a trading plan is very, very crucial to you becoming a successful trader. People that have failed, and you can ask people that traded before and they said, I don't like the stock market, it didn't work out, I didn't make money. Ask them, hey, did you have a trading plan? They probably don't even know what a trading plan is. So with that being said, you have to have a solid trading plan. You have to understand your entry points on stocks. And the biggest thing about a trading plan is you have to know where you're willing to take a loss. Before you get into any trade, you have to know, hey, I'm getting in this stock at 10. I'm comfortable in taking a loss at $9.50. because the support level is at 970 and it's moving around the 200-day simple moving average, just using some terms. Along with that, you have to apply risk management. You have to say, hey, this is the position size I can take on this trade to lose 2% and all those factors. You have to know and have a solid trading plan to be a successful trader. And that's one reason a lot of traders are actually failing. Reason number 4, emotions. A lot of new traders that start out don't realize how important and huge emotions and psychology basically plays in trading. People think, hey, I know all the technicals, I know how to read price action, I know how to read charts, I'm the best trader in the world. No, there's a lot of emotions involved when you trade. There's a lot of fear, there's a lot of greed, there's a lot of hope that gets involved when you start out trading. You have to learn how to control your emotions. And one of the best ways to control your emotions, in my opinion, is have a trading plan. If you have a trading plan, and when you have a trading plan, have it written down. Don't think about a trading plan in your head. Don't think about a stop loss in your head. Have everything written down, because once the screen is in front of you and you have all the numbers fluctuating and you see everything from a different perspective, you are not going to go based on everything in your mind. So if you have it written down, guess what you're going to do? You're going to say, oh, when I was looking at this stock, I knew I'm going to have a stop loss at 350. The reason I'm going to have the stop losses at 350 is because of X, Y, and Z. And with that being said, I'm going to go ahead with this trade. When people don't have it written down and they're in a stock, they mess up. They're not comfortable in taking a loss. A stock, they get into a stock at 4, it goes to 3, which they should have sold, but guess what they do? They hold, thinking, hey, it's going to keep going up. Next thing you know, the same stock is at 2, the same stock is at 1, and they end up never selling, and they're down 75% about the one trade. They get wiped out. Another reason a lot of traders fail when they start out is they focus on having money goals. What I mean by that is, they would start out with trading and they would say, you know what, my goal is to make $1,000 a week, or my goal is to make $5,000 a week, or my goal is to make $500 a day. Now think about this. If you start trading and your goal is to make $2,000 a week, right? Obviously you need the right capital amount and position sizing and all these things to actually set up, put yourself in a situation to say that you want to make $2,000 a week. But besides that, if you put out a goal to make $2,000 a week, and let's say up until Thursday you didn't make $2,000 or you didn't make any money at all, guess what you're gonna do Friday? You're gonna go out and you're gonna force trade, because now you have to make $2,000 by Friday. So on Friday, you're gonna take on big positions, you're gonna make dumb choices, and you are going to take a major hit. And then after that major hit, guess what you're gonna do next? You're gonna take on another bad trade, take another major hit, and another bad trade, and make take another major hit, just because you had these goals that set out and you wanted to make $2,000 or $1,000 a week or a day or whatever the situation is, and you didn't hit it. So now you get yourself worked up and you make bad trades. The final reason a lot of traders fail is they want instant results. A lot of traders come into the market and they want to start making money right off the bat. Right off the bat, they enter and they're like, oh, I want to make $10,000, I want to make $20,000, I want to make X amount of money. Trading does not work like that. If anyone told you that you'll start trading in a week and you'll make this crazy amount of money, they are lying to you. Trading is not that easy. Can you make money from trading? Yes. Is it hard? Yes. Is it doable? Yes. It's very doable, but it takes a lot of time. You will not enter trading and start making an enormous amount of money right off the bat. I will tell you that right now. You are not going to make an enormous amount of money when you start out. You will not get instant results. It takes time to get results. It's going to depend on how much time you're putting in, obviously how much capital you're putting in, your proper strategies, risk management, you having a trading plan, you understanding price movement, and all these things have to be combined for you to have a successful trading career. But remember, it's not going to happen in a matter of days. It takes a few months for you to be very, very comfortable and actually become a successful trader. These are the 6 reasons that I think most traders are failing. I'm pretty sure if one of you guys have traded before, you guys probably noticed that you fell into one of these traps. These are one of the reasons you've traded. If you haven't traded and you're looking to get started, avoid being one of these people that fail because of these reasons. Work your way up, put yourself in a situation where you avoid these 6 reasons and you actually get over them. And keep in mind that trading takes a lot of time. You're not going to become rich overnight, and if anyone tells you that, they're lying to you. It's not real. Be patient, give it time, and I promise you, you'll be successful, but you have to be patient and you have to give it time.